This conference will now be recorded.
Okay, so we are completing our work on the statement of cash flow. This was the fourth financial statement, and we said that there were four parts to the statement: operation, investments, financing, and changing cash. And so when we evaluated a business, we wanted to make sure that it had cash from operations. If the business does not have cash from operations, it's problematic. We wanted the investments number to be negative, which would reflect the fact that the company was investing and expanding. And we would appreciate financial to be negative because the company was paying off debt and dividends and still a positive change cash flow. So this is a general guide of what we look for when we have a statement of cash flow. Four parts: operations, investing, financing, and changing cash. So it's four parts of that statement. And we'll look at a statement in a few minutes. But these are the numbers we like to see in summary. Then we got into how we prepared a statement of cash flow, the rationale behind it. And we started with this equation: asset equal liabilities plus owner's equity. And then we said assets equal liabilities plus common stock plus retained earnings. Then we went to the second one: cash plus other assets equal liabilities plus common stock plus retained earnings. And then on this fourth one, we said that we needed to find cash. Cash equals the liabilities plus the common stock plus the retained earnings minus the other assets. And we continued to further break down the various components of all the accounts. And we came up with cash equals the current liabilities plus the long-term liabilities. It equals the common stock plus the net income, or this will be minus the long, minus dividends, minus the current assets, minus the long-term assets, plus contra accounts. And so if we wanted to look at the change in cash, we simply could look at, to get that change in cash, rather than looking at 10,000 cash transactions, we could look at 10, 15, 20, and 30 accounts and come up with that same analysis, the same results. Are there any questions on this accounting equation and this deriving that we did? Are there any questions? Okay. So if I ask you about this on Thursday, you got this down. Good. Then I
Sir,
gave you,
excuse me, sir.
yes, like,
So on Thursday, will we be able to use the paper to give us the equation, or do we have to like remember that?
Lathan, you're too much.
Not for real, because that's a lot. That's a lot. And like I can do it with the paper, but I don't think I'm gonna remember.
Uh, we're never into memorizing, just like memorizing the journal entry,
Oh, okay,
tax,
okay,
chart of account. So we're not into memorizing, but I
okay,
do expect you to understand what's happening here.
okay.
You will be tested on your understanding of what's happening. How are we
Yes,
doing,
sir.
Miss Brooke? My shining tutorial star, who's saving all the
I'm
principal's
good.
one students.
They're really good. Well, better than our class from last year. So
That's good. Well, I appreciate the help. Anybody who can assist Brooke today, that would be good. At 2:06, they have,
Question.
yes.
What time y'all be having tutoring?
This is at 2:30.
And this on Tuesdays and Thursdays?
Correct. In the classroom.
All right. Good.
We'll see you there today.
Maybe.
Maybe. So I tell
No,
you.
I'm just
Okay. So I'm not interested in you memorizing, but I'm interested in you understanding the concepts always. Then we had this template, and when we look at operations, we said we wanted the cash to be from operations, from net income, hopefully, or a loss. We add back the depreciation because that's subtracted in coming up with net income, but it's not a cash item. So we add it back because it really, we subtracted it to get the net income, but it didn't reduce cash. Then notice we have the current assets. If they decrease, that's a source of cash. If they increase, it's a use of cash. We have the current liabilities. If they increase, they are a source of cash. If they decrease, they are a use of cash. And so we have all the current items. Also included in the net income would be a loss on the sale of a long-term asset or a gain on the sale of a long-term asset. We don't want that item in operations. And so if it's a loss, we add it back. If it's a gain, we're going to subtract it on the other side. So it's in the net income. These transactions get those gains and losses out because the only thing we want to see is the cash and the changes in the current assets and the changes in the current liabilities. This is where cash has to be generated for a business to be successful. So that's the general thing you have to understand. The second part is investments. This is where the long-term assets go. If you sell a long-term asset, it's a source. If you buy a long-term asset, it's a use. And what we said was that selling a business, selling a long-term asset is like you selling your car and you don't have any transportation to get to work. So we don't want, if we see gains over here or losses, we're concerned because that means the company is shrinking. We would rather see them purchasing long-term assets and part two be negative. Then we have the cash flow from financing, okay? Issuing stock, or we can buy it back, and long-term loans and payment of dividends. And so this is a source of cash, but it's not a source of cash that's important in terms of generating cash. We put cash in this section so it will generate cash in operations. So we're never concerned about measuring the change in cash here per se, because either we issue some stock or we took out a loan we got to pay back. And so the key thing, if you have funds here, just like with a student loan, you eventually got to have some operating funds to pay it back. And then I told you that so you wouldn't be confused and you could get a C if you put in the change in cash, and then you put in number two, the net income or loss, and then you put in number three, the depreciation, then you put in number four, the dividends. I told you you would make a C on your test. Is there anybody who can't get a C on the test?
I got a quick question.
Is there anybody in here who cannot get a C?
I got a question.
Yes,
So when there's multiple depreciation expenses, you just add those up, correct? And then add it up
correct.
to three. Okay.
That's correct. There are multiple ones you add. So is everybody gonna make at least a C? All right. Sounds good to me.
Attempt to.
Attempt to.
Real quick, Mr. Boyd, I have a question. It's about the dividends. So the paper only gave you the dividends, but didn't give us like the income. So were we supposed to like work backwards to find the income and then put it into?
Yeah, that's kind of where this equation comes into play. You use that equation in a lot of ways. So in that situation, if we know the cash, then if we need retained earnings or something, we work this equation in terms of finding retained earnings. Or if we need the net income, we work it in terms of finding the net income. So as I said, you need to understand this equation. Assets equal liabilities plus common stock plus retained earnings. But retained earnings is what? Consists of net income minus dividends. So as you said, if you're trying to find net income, you could solve this equation in terms of net income. So if I told you to write this equation so you could solve net income, how would this equation look? That's a good question, Mary. That's a good question. How would this equation look if I told you to solve it to get the net income? How would this equation look?
Would you swap net income and cash and then like subtract cash? Because if you move it to the other side, you have to make it a negative, so it would subtract, and then you move net income to the other side. Maybe.
Yeah, so here's net income right here. So let's assume we kept net income on the side. Let's see, let me do a. So I'm gonna put net income here, I guess. I don't know. Well, I'll leave net income for the last. So right now we have this equation, and I have on the left side what? Cash. Okay, I got cash. Right. If I'm gonna put everything on the other side, what's it gonna look like except net income? What's current liabilities gonna look like on the other side?
It'll be subtracting.
All right, so it's gonna be minus the CL. For the long-term liabilities,
Add.
Subtracting. And
minus
so
the
then all
long-term
of them,
liabilities.
because common stock and net income are also positive, so would you be subtracting those two as well?
I guess you have to subtract them. Minus the common stock. Well, we're trying to solve for net income. So what we're going to do with the dividends?
Add it.
The dividends are going to be added, so it's going to be plus the next thing. Plus the dividends. Little algebra lesson here. What about the current assets?
Also add it.
They're back on the normal side, so plus the current assets. And long term, plus the long term
It's
assets.
going to be added, and then the contra accounts are going to be subtracted.
Minus the, Correct, because remember on the other side, when they get back over here, they're normally subtracted. So minus the contrast. And the only thing we have left on this side is what? Equals what?
Net income.
Okay. Any other questions? Okay. So we had, okay, so everybody said they can do those first four things and get a C. They can do those first four things and get a C. Okay, so it might be time for you all to talk now and work a problem for me. What team is ready to go? And tell me, work a problem for me. Realizing that you only got half your points when you submitted this. So you only got half those points. I explained that to you all. And when you submit homework is what you present to me. So you only got half your points. So you want your other half, you better start presenting or keep your half credit. How am I not? Y'all said y'all gonna make a C, so just show me how you can make a C on what you have so far. Because if you don't present, half is not even a C.
My group can go.
Well, thank you, because I was getting ready to give y'all a quiz if y'all didn't say anything. Let's see. That's not the one I wanted. Well, come down here. Let's see. Download. Let's see if it's coming up somewhere. So I guess this is it here. And so let's look at the problem first. So we're on problem 10. So Winger, what's the first thing that you're going to do on problem 10? So problem 10 had sales, cost of goods sold, gross profit, operating expense, depreciation, net income, total assets, and okay. Well, put your answer in the chat, and somebody in the chat can tell me, and somebody on your team in the chat can tell me what you said. So put your answer in the chat. So this is their problem. He's putting his answer in the chat. So what is he putting in the chat? Let's see. What's he putting in the chat, Usha? What did he put in the chat?
Nothing, but you would start off with cash.
How much would it be?
Oh, that's 50,000. The change.
And what's changing cash? No,
Yeah,
because you wait a
50,000.
minute. How much?
50,000.
So the changing cash is a minus 50,000. Nichols, what's the second thing? Kinsley, what's the second thing?
Can you hear me?
I can hear you now.
Is that the accounts receivable?
I asked you for the second thing you would do.
Then you would look for the change for accounts receivable. Right. Right. Can you hear me?
Kiana,
I'm
your team, I
Next,
don't know what I'm gonna do with your team. Y'all hadn't got the
next we
post
would
yet.
do either net loss or net income. So here we had a net income of 600,000.
So the second thing she should have done was to put this net income in. Third thing,
Payment of dividend.
It's going to be depreciation.
and the next was depreciation. And we look in here and tells depreciation was 100,000. What's next?
Inventories.
What's the dividend? Did it have dividends?
It did. Was 150,000.
How'd you get 150,000?
Oh, it's the net income or the beginning retained earnings plus the net income minus the ending retained earnings equals the dividend. Right?
Well, I'll take your word for it.
All right.
Then we did the changes in all these other accounts. Receivables next. What did receivables do?
Increased by 25,000.
So what side is that going to go on?
You're right.
All right. What did inventory do?
Can you hear me now? Hello?
Hear you now. What
Okay.
did
Well,
inventory do?
it increased by 200,000.
So what you going to do with it? So if inventory increased by 200,000, what we're going to do with the inventory?
You're going to put it on the right in the same spot under current increase in current assets.
Part 1, part 2, or part 3?
Part 1.
Okay. Equipment, what we're going to do?
Equipment was an increase of
575,000.
So what you do with the increase in equipment?
it's going to be in part 2 on the right side
Okay.
under purchase of long-term asset.
Next, investment in IBM stock.
Okay, that one's an increase of 100,000, and that one's in the wrong place, I think, in what I submitted.
Wrong place. Is it?
But it should be in part 2, right? On the right side.
You got it in the wrong place. Hi, I've heard enough. All right, next team, get ready. This looks like about a gift 7 effort. Get it larger, but that's fine. All right, let me see what I'm gonna pull up next. Any volunteers?
Me, I'm gonna get mine over with.
All right, Brooks, I'll get hers over with. Your team is who I want to get it over with.
Let's just get it over with.
All right, so Brooke wants to get it over with. There y'all come from. And we'll save it. So what problem y'all have, Brooke?
We had 9.
Who else on your team?
They're here. I'm not sure if they're here.
All right, so
Oh, they're here.
they're all here? Good. Meet, what's the first thing we're gonna do?
I think
You talking
the
to me?
first thing we have to do is, oh no, is the cash.
So what you gonna do, Meet?
You have to find the change, which would be 1,000 minus the 60,000, so 4,000 or 40,000 in cash.
So where you gonna put that at?
I
Where you
don't
putting that on
remember where we
statement
did
cash
that.
flow?
I think it was.
What part? 1, 2, 3, or 4?
I think we put it in part 2.
Well, I tell you. You know, you make a mistake on cash, you know, that's a double deduction. You got the cash the wrong place. That's a double deduction, bro. What's wrong with your team?
Absolutely not.
What's wrong with your team? Tell me you're gonna put cash in part 2.
Stop. They go in part 4, Dr. Boyd.
But your team's got to put it in part 4. All right, Mohammed, what's the second thing you're gonna do? That she was here, right? What's the second thing?
Can you hear me?
I can hear you.
Okay. Can you move the sheet back down?
Now I want you to tell me. Tell me what you're gonna do. It's
The
your
next thing
problem.
should be accounts receivable, and then you're gonna subtract. I'm sorry. You're gonna find the difference between 2012 and 2013, and it's gonna be an increase of 300,000.
Well, I guess that is the second account. So we'll let you. So what part is going in? So where you gonna put the change? Team's got to meet and drill and work, and so where you gonna put the change at? Is she still alive? I mean, her mic's still working. Well, Brooke, where'd you put the change at?
Well, I would do my net income or my net loss.
Oh, you do your net income and net loss next. So you had a.
Mm-hmm.
So what would you do? You had a loss of 45,000. So where would you put it?
My loss of 45,000. It would
Mm-hmm.
go in part 1. I would put it in the use where it says net loss. of 45,000.
All right, so you're gonna put net loss in. What's the third thing you're gonna do?
My depreciation.
Well, Mead now. Back to Mead. What's the third? What you gonna do, Mead, with the depreciation?
With the depreciation, you have to put it on the statement of cash flow chart. I see it's the 200,000, and I think we put it in the part one where it says depreciation and then the EX.
All right, so we put that here on depreciation to 200,000. And what's the fourth thing we're gonna do, Muhammad? All right, back to you, Brooke.
We're gonna get our dividends
How you gonna
by
get your
doing
dividends?
the statement of retained earnings.
Okay.
So we had a beginning retained earning of 300,000. We had a net loss of 45,000. Then we had ending retained earnings of 200,000. And then when we do our subtotal of our beginning and net loss, we get 255. And our ending is 200,000. So it brings our dividends to 55,000.
Okay, so what she said she did was to do a statement of retained earnings. The beginning retained earnings was what?
It was 300,000.
So she had a
300,000.
beginning retained earnings of 300,000. Over, back over here. So this is the beginning retained earnings. Next,
And then next is our accounts receivable.
well, no, I'm still working on you're going through this one time.
Oh, you're still
Get the
doing on
dividend.
the dividends?
Yeah, so we had a
What do you
net
need
loss,
next?
right?
Loss? The net loss is 45,000.
So that's going to be a minus 45,000 since it's a loss. It doesn't like that. Okay, what's next?
Then we have our subtotal, which is 255. It comes out to 255,000.
So subtotal 255.
And we don't know our dividends yet. So then we go to our ending retained earnings,
So dividends
which
is the
is
question.
200,000. Yeah,
So what's our ending retained earnings?
200,000.
So what must dividends be?
55,000.
Does everyone see that? The subtotal's 255 with the ending is this, then the dividends have to be the difference between the two. So where the dividends go?
They're gonna go in part 3 in use. Should be at the bottom. Payment of dividends.
Okay. That's dividends. Next. So we got our
Next,
first
we're gonna
four
take
things.
our accounts receivable,
Okay.
and it went down by oh no, it went up. Sorry, it went up by 300,000. So we're gonna put it in one use, increase in current asset.
All right. Next.
Then we have our inventory, which increased by 300,000 as well. So we're gonna put it in the same place, one use, current asset.
All right. So that's inventory. What's next?
Then we have our equipment, which increased by 150,000. It goes in section 2 under long-term asset.
Goes under long-term assets. What next?
Then we have our I think we did depreciation already, right?
Yep,
Yeah.
did it already.
All right. Then we have our land, and that's where I got kind of was iffy about. I had worked through it. I was kind of confused. But when we have a loss of land, and it was like 45,000. So I put it on loss on sale of long-term asset.
So we take the loss and we put the loss here. If it were a gain, it'd be on the other side, but as a loss, you see when we look at the income statement, uh, they really had zero net income. The loss from operations, then the loss made it a negative 45, but operations was actually 500 minus 500, zero. So when we add that loss back for 45,000, we put it over here instead of that counterbalances the 45,000 here, and so operations are at zero. What's the next thing we're gonna do?
So I did have land. I just put 55,000 in cash proceeds from sale.
How did you get 55,000?
So I lost I had 100,000 and then I lost that 45. So I just did 100,000 minus the 45, giving me the 55,000 that I needed.
So if you lose money, then you subtract the loss from the cost of the land. So we lost money. So we're going to go and subtract that from the cost of the land. Uh, and those are our sales proceeds, 45 minus 100, 55. If this were a gain, you would add it to the cost. So you have to determine which one of those situations you have. Then what do we have next?
We have accounts payable, and it went up by 200,000. So I put it as one source in current liability.
Okay.
And then my long-term payable, it went up, increased by 200,000 as well, and I put it in part 3 as a. And then for
Okay.
my last one, I have stock. It went up by 310,000 and put it in as um in 3 as a source.
So did
Part
all of
3 as a
this add
source.
up?
Yes, sir. As you can see in the change in cash flow, it went to negative 40,000.
Are you going to invest $1 million in this company or not? Are you
I'm
going to
not.
invest $1 million?
No, I will not be investing my money into this company. All good?
All
Yes?
good.
Okay.
Okay. Let's see if we can. So those two basically cover what you should know and what you're supposed to know. But teams, you're responsible for all of these. So teams, you need to go through and practice on some others. Meet and practice on some others.
I do have one question.
Yes.
How come we did net loss and the depreciation before we did like the rest of the accounts? Or is that just like the way it goes?
You can do it any way you want to. A lot of time to keep people from being confused, I tell them to do four things and they got to see. Some people will look at the whole problem and say, I can't do anything. And so what I found, if I tell them to do the change in cash, the net income, depreciation, and dividends, they get something done. But you can do it any way you want it, just so you balance it out. But those steps are just so that people will have something done.
Can you go back over what you do with the land when it decreases?
Okay, just a second. Okay, let's talk about the land. We had land of 100,000. It went down to zero. Okay, so we know we you know the land is no longer there. We sold it. We had a loss on the sale of the land of 45,000. So if you bought something for 100, you bought it for 100, and you had a loss of 45 on it, then you only got $55. If you bought something for $100, you sold it for a loss of $45, how much cash you gonna get? Got it?
I do. And then when you add, you just adding to it instead.
So the next thing, suppose we sold it for a gain of 45,000. So if we bought something for 100 and we had a gain of 45,000 on it, how much cash will we get?
145.
Okay, 145.
Perfect. That's all.
And so the 145 would go under land, or would it go under gain of land, gain of sale?
Okay, if this were a gain, well, it'll be over here. The gain of 45,000 would be here if that were the case. Okay, but then the sales proceeds are now going to be 145.
Okay.
So if there is a loss, you subtract from the cost. If it's a gain, you add to the cost. Any other questions?
I got a question.
Yes.
So, net income don't come second, it's depreciation, or
Say
yes or
that
no?
again.
Net income doesn't come second.
Yeah.
Oh,
We
okay.
said that if you wanted to get, you know, to not be overly confused and get going, put the change in cash first. Net income or loss second. Depreciation third, since you're typically told what depreciation is, and then calculate the dividend, and you'd be half finished with the problem. Or you can just start up here with cash and go straight down. That's up to you. Whatever way works best for you. You've got 10 problems. So you can, or your team can practice on additional problems. So there'll be an A test, there'll be a B test, I guess where a lot of people will be, where you're going to have to use that accounting equation, and there'll be a C test, where you won't have to think as much. So just tell me which test you want. Email me tomorrow and let me know whether you want an A test or a B test RC test. Let's see if I can get this out.
Professor Boyd,
Yes,
our test is next class, correct?
that's correct.
Okay.
Unless you want it today.
No. That's okay.
You want it
No
today?
one said that. Wait, no one said that.
Okay, so let's look at the study problem that you have. And the purpose of the study problem is to review what we've done. So we're reviewing the whole semester, uh, which includes Principles 1. So we're reviewing that. And so on the A test, you've got two columns, your January 1st numbers and your December 31st numbers. Now let's go to this trial balance. You just saw when we had those problems, you had an income statement, you made a statement of retained earnings, and you had a balance sheet. Well, on the A test, you don't have any of that. On the A test, you only have balances. Okay? And so you've got to what? Create. You've got to create the beginning balance sheet and the ending balance sheet. Okay? You got to create the beginning balance sheet and the ending balance sheet. So for this first column, these are your permanent accounts at the beginning of the year. They're going to be on the balance sheet. For the second column, you got permanent and temporary accounts. So you're not making a journal entry. You have permanent and temporary accounts. I just have them in alphabetical order. I got them in alphabetical order. So you got to come to this sheet and you got to prepare a trial balance, get an income statement, statement of retained earnings. You got to do your beginning of the year balance sheet and your end of the year balance sheet. So to get you all started, let's go back to the problem. So I want you to come in here and we know what's the first account on the balance sheet?
Cash.
That's cash. What's the first account on the trial balance? What's the first
Also
account on
cash.
the trial balance?
Cash.
Also cash.
Okay. So all of you should have your spreadsheets out. What I want you to do is to fill in the blanks for cash. So since cash is first, tell me what you would do. Everybody see the numbers? What numbers do you see by cash?
I don't see any
Two
numbers.
200,000.
Oh, okay, never mind. I still can't see it. It's little.
What numbers you see cash and what two numbers you see?
200,000 and 400,000.
All right. So when you come to the trial balance, what you gonna do? On the balance sheet, what you gonna do?
With the change in cash flow?
Can't do that. You don't have a balance sheet yet. You got to create it.
You gonna
So
put
you
Mm,
got to
would you just
create your balance sheet now. And so the first thing I would do, since the 200,000 was the beginning, I put 200,000 right here. And since 400,000 was the end of the year, I put 400,000 right here. That's what I would do. But then I would, on my trial balance, since I got to go through the whole process, I would be going with what number here? What number's going to be here?
400,000.
300,000.
I think the 400,000 is going to be there. So do you see what you're doing now?
So why do we do the 400,000? Is that because that's the ending?
That's the ending.
Okay.
Are there any questions? What would you do next?
Account
Account
receivable.
receivable.
So we're going to do account receivable. We're going to stay in order. So we go down here first. What's going to be on account receivable here? What's the beginning of the year?
300,000.
300,000.
300,000.
What's the end of the year?
400,000.
425,000.
How much?
Hold on.
For what?
425,000.
What's going to be on our trial balance? Can't hear you all.
It'll be our ending. So
425,000.
425,000.
Sure ending 425. Y'all don't think I'm going to work this whole problem for you, right? This whole 20-point problem. What's the next thing? Going to go on this trial balance and on the balance.
Inventory.
What's going to come next?
Account payable.
Business.
Now, what you always got to do is get that chart of accounts out. Okay? What is the next thing you see on this chart of accounts?
Inventory.
Okay. All right, so I'm
Is it not inventory? Uh,
so inventory is next, okay? So go ahead and put it in. I'm not putting any more in for you all. It's you all's 20-point problem. So put your inventory in. Got those inventories in?
Isn't it? Oh, do we tell you or you gonna put it in? You want to put it in? Mr. Boyd,
Yes.
you can put it in.
No, I'm not doing it anymore. Unless y'all don't want those 20 points.
All right.
All
Hey,
y'all at
hey,
sea
all
is
right, all right,
all
all
y'all
right.
at sea is today for the submission.
O-
So when I do the
Okay,
work,
okay, okay, okay. Okay, I'm sorry.
so now you're going through based on that chart of accounts, putting everything in.
Mr. Boyd,
Yes,
did we go over how to dictate which side goes on debit and which side goes on credit, or do we just follow the sheet, what the basic debit or credit says?
it tells you what the normal balances an account is supposed to have on your chart of accounts.
Okay, I just wanted to make sure.
NBs, normal balances. Do we have the balance sheet finished yet? Beginning of the year balance sheet for assets?
No, sir. It's a lot of numbers.
Okay.
Are we doing just like we doing all like everything, right? From account
Yep.
payable all the way down to treasury stock?
Yeah. So
Okay,
we were going back and forth, but what you might want to do is, it depends. Yeah, you got to go through everything, but you might want to just go and do January 1st and do a balance sheet. Get that done. But however you want to do it, it doesn't matter.
Professor Boyd,
Yes.
I gotta leave in like 5 minutes. I got another class. So, are there gonna be more steps? I mean, I don't want to miss anything, but I gotta go.
No.
Yeah.
But uh, you're gonna, with those beginning of the year numbers, you're gonna do a beginning of the year balance sheet. Okay. Then with the end of the year numbers, they're gonna come on the trial balance. You're gonna come through and create an income statement, statement of retained earnings, and your end of the year balance sheet. So you end up with two balance sheets. Once that's done, then the third step is then to prepare the statement of cash flow. to prepare the statement of cash flow based on what you've done. So Wednesday. Maybe at 6 o'clock on Wednesday, I'll have some office hours. So if you have any questions, does that time work? 6 o'clock?
Yeah.
Professor, do you have any other times? I have class.
Okay. What other time would you want?
Like sometime in the morning? We can do before class. Before class?
You're talking about Wednesday now.
Okay, then Wednesday, anytime mid-afternoon. Anytime mid-afternoon?
Who's that in the background talking?
My sister. For real, we need to talk to you like ASAP.
Okay, so the answer is no, but in terms of the question you are gonna ask, the answer is no. But we can talk. What about 3 o'clock?
You're talking about for Wednesday?
Yeah, for Wednesday. Or do you want it earlier than that? Doesn't matter.
No, that should be fine.
Okay.
And you're talking about like in person or online?
Coming right back to this classroom.
What's the classroom number?
Whatever it is. Uh, wait a minute. I'm gonna just open up the go-to meeting at 3 and at 6. Okay. So you just sign in and I'll be
Okay.
here. Got it?
Is this a tutoring session or you just opening up for questions and concerns?
Well, that's just often our, session in terms of any issues or problems.
No, okay.
That way you could work on it tonight. Excuse me just a second as y'all continue to work.